All right. I think we are streaming. This is the thing about streaming is that sometimes you have to wait a second, and we are live. All right, what's up, everybody? Ted here with Bodies and Wicks. It was a celestial event last night, so I got kind of a celestial background, with Jupiter and Saturn aligned. I don't know if anybody caught that, but I hope you did. It was a pretty cool sight, to be honest, to catch something that you are never going to see in another 800 years. But let's see if, I didn't really catch the pips I wanted to catch in 800 years, but that was all my fault. But so celestial events are the topic or the theme tonight, I guess I could say. Anyways, hope everybody's had a great Wednesday, hump day. It's Christmas Eve. Tomorrow is Christmas Eve. And so we should get on some different things, right? What should we talk about tonight? Which pairs would you guys like to talk about? I mean, everybody knows. I've got my ones that I'm going to talk about, right? Everybody knows which ones I'm going to talk about. The question is, what would you guys like to hear about? When I look over to the right, it's because I got my monitor over here. So I'm looking over here trying to check out what I should look at. So, all right, usually what I do and what I will do, and I'll go ahead and start off with the crypto, because I know all the crypto lovers love the crypto, right? So for all you crypto lovers that love the crypto, let's head on over to the crypto scene, right? So that did not look well, did it? All right, anyways, it just cut right to it. I gotta change up my settings here, and looks like I just did. We should be good now. All right, so anyways, oh yeah, if you haven't already, go ahead and subscribe to the channel. Give it a like, give it a share, especially if you like the content. I'll be sharing with you guys. I'm sure you'll like it. I usually give a kind of a different perspective on studying price action, studying how charts work. I don't do your typical slopes and triangles and trend lines and things like that. I look for price action, I look for certain price points, and I go off of that. And because that's actually how charts work. Charts do not obeyed by slanted lines. They obey by price points. And I can easily prove that by using this Bitcoin analogy right here, and I'll do it really quick because I made money off of it, and I did it again last night. I showed the same thing last night, and I did it again. So I'll show you what happened last night. Here, let's get into the 5-minute of it. Here, let me actually get rid of some of these lines here because they're not going to make any sense until I put them back on, right? Oops, I hate when this thing comes on. But the thing is that YouTube only likes me for an hour. So I have an hour to get this in, hour to get this out, which is fine. I need to get to bed early tonight because I lost money today because I didn't get up in time. I actually slept through my alarm, was late for work because I stayed up late trying to trade before the London Euro session starts. So I want to get done early tonight, get to bed early. That way I can wake up early. So what happened last night that I made money off Bitcoin? Well, if we I was recording the video right around this time, 7 o'clock my time, which is Central Time. I am not in Chicago anymore, thank God, but I am a former Chicagoan, so anybody that is a Chicagoan out there, word up, what's going on? So if you want to look at Bitcoin here, right, and you see how you had the high, right? I think this is this was the previous high, right? And then above this previous high, you had that break above it, right? So anybody who was going long here, anybody who had their buy stop set here, which a lot of people did, right, thinking as soon as it breaks this, it's going to come back and retest it and it's going to go long. Smart money knows this. So what does it do? It barely breaks it, and it takes those people out, a really hard out. I mean, it just I'm sure who, you know, the people that had the money in this game, or whoever's developing the algorithm, because if you don't think Bitcoin is off of algorithm, you are fooling yourself. All of these are off an algorithm. And the algorithm benefits. If it's not by an algorithm, it's definitely controlled by the people who have the most money in this game, and they know how to take people out. All right, so you have to know how to beat them at their own game. So they had their buy stop set here, goes up, takes them out. So what do you do to combat that, right? So you know that since it's already made one fake out, it's going to do it again. All right, so you set a fib is what I like to do, right? The fib is not the end all be all. It is not. I wouldn't consider this, you know, your magical tool, but it is going to help you understand where where to start looking for shorts if you're going to be shorting the market, or buys if you're going to be buying the market, or longing the market, I should say. So I'm in the hour, right? Let's get down to the 5 minute. 5 minute is where you're going to find this at. So after it made this fake out, right, above this high. See, I have the high already marked out. Made this fake out above the high. It came down, right? And you could even actually, this is even too far. I could probably even use the first one, which I probably should, because I want to say this is actually double the original. Oh, it is. Okay, so I did use this one. Never mind. So I am right on. Even though I do have indicators, I don't use these. I don't believe in indicators. Sometimes I use them. It depends on where the market's at, and then I'll look at it to see if there's divergence or not. But other than that, I don't use indicators. So now that you have your first fake out, it pulled people down, and it's going back up. Everybody's going, oh, look at that psych out. That's a psych out. You know, it's gonna be another bull market. You know, and they keep buying. What you see here over to your left, right? What you look for is your kind of eccentric moves. Eccentric moves meaning your big ups and your big down moves, right? Moves that move more than about 60% of your previous move. So here you kind of had this lollygag. Well, you kind of had this, you know, sideways move up, and then you had this, and then all of a sudden you had this straight down, and you had this bang move that kind of went up right here, right? So you had this big move right here. So that's where I'm looking, right? That's where I'm looking to say, okay, this is where the market can possibly short, right? I'm looking at this, you know, because that's where the lowest point was, or I'm looking at the green candle, right? Because that's where it's showing the positivity is. That's where the positive volume is. So I'm looking at these 2 points. If it gets up into this area, that's where I'm looking to sell. What does it do? It got right up into those areas, in between those areas. Boom, I sold. What did it do? It came down, came right back up into that same area that I was talking about. Boom, sold. Came back up, put into it. Boom, sold. And then there you go. That's how you make your money. That's where you know where to look. You look at those big moves. That's where it's going to tell you where the market is going to go and retrace from, and all that good jazz stuff. So now that's being said, again, it happened last night, right? So what happened last night was we had the same kind of structure, right? But look, it came up into that same area. That same area as the previous night before, right? So this is a strong area to where if anybody basically went long, the bankers, I guess you could say, you have enough money to just pump it really hard, right? Pump it really hard. It jumps up really quick, and so they sell at that moment too. So they fake people out by pumping it so hard that everybody else starts buying, and then they short it. Well, they have the money to hold it. They have the money to hold it until it gets back up into that area. Once it gets back up into that area, then they can release that buy, right? Because now they're not at a loss anymore, and then they can sell, right? So that's what I'm saying by you have to look for those big explosive areas, because those big explosive areas are going to show you where somebody took a lot of money and went boom and pumped a lot of money into the market, and then they convince people to buy or convince people to sell, and then it eventually comes back to that area. It goes the opposite way of where they were going because it's a fake out, right? And then it eventually comes back into that area. They release their buy or their sell, and then it goes the opposite direction. So it happened again, right? And it usually happens at anywhere between the 62% and the 80% level. Somewhere around there, not always, but it usually happens somewhere around that area. So last night, it did the same thing, right? You have this high here, which it came to that same exact point, right? If I want to zoom in on this a little bit closer, I probably want to say it's exactly at that point. It is. So there's that low point, that first low point I was talking about. And then whenever I actually bought into this a little bit early. Not gonna lie, I waited until it got up to here, because what I was looking at, and I should have been a little bit smarter than that, because I saw here's the down movement into the up movement, right? So these three candles, right? There's three. I'm gonna make it a little bit bigger so you can see, right? There's these 4 actually kind of candles, but even this one kind of has a hammer, or it's like a upside down hammer, I guess you could say. It would still be considered all one candle because price did not spike up out of it. You didn't see this one spike up out of this candle, or this one go way down below here, right? This would still be considered one candle because the wicks weren't extreme enough to get outside of each other. So I'm looking at this and I'm saying, okay, boom, it's right at the 80%, or the 79%, I should say. So that's where I was looking at whenever this was coming back up into it. And I was thinking, I'm going to sell here. And I did, right? It came up into it. I sold. It came down. I was like, all right, cool. But then it started going back up. And I'm like, oh, no, this isn't good. But then I told myself, I said, if it gets above this, I'm in trouble, right? Because that was the previous old high. I said, if it gets above this, I'm in trouble. If it doesn't, I'm okay. And what did it do? It spiked through those levels that it did previously. It dropped below my 80%. It came back up, touched it. I had to hang around for a little bit, but then it was probably a couple hours later, I want to say, it dropped 400 points. Boom, there it went. And that's how I made my money on Bitcoin last night. I made enough money on Bitcoin last night to cover probably about half the week I make at my job, but that's okay. This is what I do. I'm saving for retirement. I'm not actually doing this for a living. I find the right moves, and then I just take control of them, and I invest that money into other things, and then I save for retirement. I don't actually own any Bitcoin. I'm not one of those people that hodls Bitcoin. I don't think it's the right thing to do, because Bitcoin, anybody could pull the plug at Bitcoin at any moment. The government hates Bitcoin. Who knows what the government could do to it? So instead, I trade it, and it works out for me. So, anyways, that's again how I look at Bitcoin. Now, what is it going to do right now? What I looked for, especially when it came down, and when I got out at this line here. And there was a reason I got out that line. I want to say it was because, here was, you could say, that's what I'm looking for. It's a breaker, but it's a bearish breaker on the other, like if you're coming from underneath, this would be considered a bearish breaker. So it would have to get above this, or it shouldn't get any higher than this. So If anything, I probably should have held and waited to see if it got above this, or at least took partial profits and waited to see if it got above this. But that was too close to where I sold. So I didn't like that feeling, and it actually did get above that. So I'm kind of glad I got out right there. But what it did is it came down and it hit a bearish order block. So those big up down moves I talk about, right? It's not a big up down move, but it's enough to be recognizable. You kind of have it going down, and then you have a down candle, then you go up, and then whoop, there it goes. So this kind of, I guess you could say, consecutive movement would be that up down move. You also have almost a double bottom here, right? So this tells me the price is eventually going to get below it, because there's a liquidity pool right underneath here. People have their buy limits set right around here, thinking that this is a comfortable support zone, I guess you could say. And it kind of is, because you do have a you do kind of what's the word I'm looking for? Geez, can't think of the word. Order block. You do have an order block that is right there, right? So let me look over to the left here. And let's see where that is. It looks like it hit right there, right? So it looks like it hit right on to where there was that good kind of area to where people would buy, all right? So now here's another point of interest to where people think, okay, this is definitely a support zone, right? It's going to get below this. I can guarantee you it's going to get below this, because now we have 3 points of about the same interest, right? Thinking it's a support zone. It's going to get below it. There's going to be liquidity drawn to this. It's going to get below it. I don't know how much farther below it. Probably not too much farther, but it'll be enough, like it did, to this area here, right? How it just went barely above it and then took everybody out. Going to do the same thing. People have sell stops right here, right? It's going to be just enough to get underneath those sell stops and then come right back up. So be prepared for Bitcoin to drop just a little bit lower, right? And if I would say, and I called it, I knew it was going to get below this because of the same thing, right? I had this drawn out to where you had these two equals. Sure enough, it did. It came down below it. Probably took anybody out that probably had sell stops, thinking it was going to keep going down. It didn't. It popped right back up. The same thing's going to happen with these zones here. I guess I could just draw this straight across. So you kind of have these zones here, liquidity zones or liquidity pools that are resting just below this, right? That, and there's probably a bearish order block probably sitting right below it as well. If I were to, let me see here, this last move down, you kind of have a move up. Sometimes this is why I look at the 3 minute and the 1 minute, because you will find that there are those down moves that do happen right at the very bottom of that, and that's what will cause, see that? So you get down here, you can have a candle that goes up and then pushes down again before the movement starts to go upwards again. So I am going to say here, it's going to, see, that's what I'm saying, it'll probably just get below it, hit this order block, and then bounce up, right? So if you don't believe me, just wait. Just wait, it'll happen. All right. I know I'm getting better at crypto, especially reading it with smart money. Even though it's its own little demon, It has the same concept. So anybody who tries to say that crypto and forex, all of the different asset classes, they all do the same thing, guys. And I've been learning and watching a lot of Inner Circle Trader. I know if you have a chance, please check out his videos. If it wasn't for him, I wouldn't be doing as well as I am in this kind of realm. Understanding how these concepts work and making the kind of money that I am off these simple moves by just paying attention to price action. All right, so that was Bitcoin, right? Let's move on from Bitcoin. And I'm on perpetual futures, right? So the reason I'm on perpetual futures and not BTUSD is because it is closer to the price of what I trade, or at least it looks like it does. And the best way for me to explain the difference is I can do it in XRP. Let me get to the 1 hour in XRP. And XRP in the 1 hour, look at this. You have this massive spike that happened to where it just kind of pumped, and I don't really know exactly what happened. But if you go to XRP perpetual futures and you're on the 1 hour, oops, didn't mean to move that. You don't have that spike. So that's the difference. And when you're trading CFDs, you don't really have that either. So, and that's what I do. I trade CFDs. I don't put money. Well, actually, I do own a little bit of Ripple and Ethereum, but not a whole lot. Maybe thinking about exiting Ripple because I heard something about a lawsuit saying it's not a security or something. I don't know. I need to look more into that, to be honest. But if we're gonna look into Ripple, which I think we should, to be honest, and the thing is that Litecoin, the same move happened with Litecoin probably a couple nights ago that I did with Bitcoin the last two previous nights. So the same thing happened. It did that, move to where it went down, came back up, and then XRP did the same thing, and it did this late November. But it still did the same thing, right? Had that huge high, fell down, came back up. What does it hit? About the 70.5%. That's about where I looked to enter, and then it sold off. And then what you usually try to exit at is your full extension again. And then if you want to have another exit, you look for double extension. So far, it hasn't hit the double extension of this, but look at where XRP is. I mean, whenever I see this purple line, this is where I was telling people it's going to get below this. And the reason I think I thought it was going to get below this is because this is your liquidity pool. Everybody has all of their buy stops or either their sell stops below here, or they have their buy limits set here, thinking that as soon as it hits this area, it's going to turn around and go right back up, thinking that this is a safe support zone. And what did it do? Went right through it. Went right through it just enough to take people out, though, right? So if you think that there's an area that is a safe support or resistance zone, it's probably close, but it's not safe enough. It's not rock hard like people think it is. It's not going to bounce right off of that area. You have to think about the implications. You have to think about where the money is. You have to think about liquidity. That's what liquidity means. You have to think about where the money is, right? And if the money is right in right underneath here, it's going to come down here and reach for that money and then take it right back out and take it away from the people who poop out their money in it, okay? So this is why I like to teach smart money, because it's the exact opposite of retail. Retail would tell you to buy right here or buy just a little bit above it and then put your stop loss right here, because there's no way that it's going to get below that support, right? That support is rock solid. I mean, look at that line going straight across. That is such a good support area. No way that the price is going to get below that. What did it do? Right below it. All right? So, I'm not trying to be a Nostradamus. I'm just trying to tell you what smart money does and what it is. And all right, I'm getting a warning of video resolution. I apologize if I look a little blurry, but I hope you're going to understand a little bit what I'm saying. The video does look a little blurry on my end. I guess I put my resolution too high. I don't know why YouTube can't do that, but whatever. Anyways, what I will do is I will do one more. I'll do Litecoin. Actually, I'll do Ethereum, right? And I'll do Litecoin. And then I'll come back and I'll fix the stream a little bit. And then I'll come back and I'll do the Forex. How about that? So I'll do the cryptos right now for all you crypto people. I can smoke my own channel, screw you. And then I'll come back and I'll do Forex for the Forex people, okay? So let's take a look at Ethereum. All right, so what we got going here on Ethereum? Every time, I swear, I delete everything every time, and then somehow it comes back. I'm just gonna delete everything. Wow, Ethereum dropped really, really hard today, huh? I kind of expected that because I do see, right? If you don't see it, I do. Right here, I see a liquidity pool right here. Right here, this is where it gets above. Everybody thinks that this is a, that price cannot get below it. It's sitting on top of this, right? So this is support resistance, right? This is your support resistance line. Yeah, it's as soon as it comes down and gets close to it, you gotta buy. You gotta buy because it's not gonna get above that. What does it do? Slammed right through it and then came right above it. So anybody that had their buy stop set in this, right, or didn't have any kind of exit strategy, right, boom, it pulled right back up in it, and it probably hit their stop loss because they probably had their stop loss set right here. And what it do? Boom, right above the stop loss, or at least to the stop loss. And so now it's gradually going down. So now what would Ethereum be doing right now? Well, now it got below the liquidity pool. Are there any more liquidity pools? There's kind of one here. So price does two things, right? The price looks for liquidity, price looks to rebalance. Yeah, so it looks like it's pretty balanced. Especially now that it went through the liquidity pool. It looks bearish. Definitely looks bearish. I wouldn't expect too much more height or growth out of Ethereum. I don't think people are taking money out of Ethereum and buying Christmas gifts. No, people aren't doing that. It's just repricing. These things have an algorithm, right? So I am looking at this move here, right, coming down and then it going back up, and this could have already happened with this candle right here. It may have went down below, came back up, hit this, and then went back down. I am not for sure. I would actually have to do the playback to find out. Let's do a playback and find out really quick. Well, I guess I could slow the speed down a little bit. Let's do that again. I want to see how it printed out. So that was, see, and it even kind of stayed up here. Stayed up here, came down, went equal, and then went straight down, pulled up. Okay, so it pulled up. It didn't actually get to this level. It got to this level here. And then it came up. Okay, so here we go. It did come up and touch this. So that was a level I was looking at. Was this level right here. It looks like it did come up, touch that level. Now it looks like it's starting to fade off. So I would say Ethereum is going to be selling off. If it does come up, it's going to be probably hitting this level here and then falling back off again. So, and if we were to throw a fib on this, I guarantee you it's probably going to be somewhere around the 80%, 70.5% level. Somewhere around there. I'm trying to find the highest point down to the lowest point. And as you can see, it is actually right in between. So above the 70.5. Well, the funny thing is that whenever it retraced from this first smash down, right, and then it retraced back up, it came back and hit the 70.5, which is where I love to trade from, and now it's starting to fall. So even though it's coming back up, I wouldn't expect it to get to the, to be honest, I would think it would probably get to about the 50 and then start to fall off. Litecoin. So Litecoin, here is where I took my trade on Litecoin, and this was Saturday night. And I didn't hold on long enough. I knew there was a little liquidity pool right here. So I sold Litecoin right here, and I just waited for it to get down below the liquidity pool, which that's when it spiked. I had my my take profit set like right around here. So it took a couple hours, but I got my trade there. And again, it was the same formation. Jeez, why does it do that? It was the same formation as the rest of them. Everybody thinks it's a flag. It's not a flag. The difference between this and a flag is that I'm getting in the trade way before the flag starts. So again, let me get into the 5 minute of this, right? Let me take this off. Where are we at? Okay, here we go. Here we go. Okay, so here is the order block. Here, there's a couple of them, right? So here's one big up move to a down move, and then here's the highest one though. So here's the highest up move to the down move. And so what I was expecting is that once it got into this zone, right, the 62% zone to the 70 to the 80% zone, I expected it to sell somewhere in between there. It hit the 71. As soon as it hit the 71, that's when I sold. But I did expect it to get a little bit higher just in case, and it sure enough did. It came up right to that line that I was talking about. Boom, sold off, came right back to that same line. Again, probably making people think it was going to buy, right? It always does is it's a fake out buy, boom, sells again. And then what does it do? Oops, didn't mean to move that. Drops below. So there was that liquidity pool. You can see those almost equal lows. Knew there was a liquidity pool there. I held on to it until it dropped below that low, right? And I probably should have held on to it even longer because it went, I think it went down to double. When it's now went down to double, and now it's even, well, it came back up. Let me see where we're going at it from here. And then all right, so where are we at now with Litecoin? Why does it keep moving things? Okay, I'm guessing, I'm looking at it now. Now we just had this big fall, right? Had a big spike down. It probably hit some kind of order block somewhere over here on the left, top of here, I'm guessing. Yep. So here, Here again, you have another big up down move, and that's how you can tell if a price is going to go, if it's going to go the other direction or not. So instead of having that up down move being down and up, this one goes up and then down. So here, right, you would expect if price was to come down, fall down into this area, right, that's more than likely going to stop it in its tracks and go the other way. If it goes through it, then more than likely it's going to keep going. It's going to keep going down. Now the thing with Litecoin is, I don't know, it's a little bit of slant. I wouldn't really call this a liquidity pool. There's really nothing here saying, hey, this is a good support zone. So if we go straight across, yep, hit exactly that point, bounced right back up. It looks like it could be bearish, but I am gonna guess no. I don't know why this line is here. I'm gonna take it away. So here's the thing. Here is your last big up move before you have a down move. So you do actually, okay, so this could be actually some bullish movement, because whenever it did bounce off of this order block and it did push up really hard, it pushed up into this area of consolidation, right? Kind of fell off a little bit, and then now what we're looking at is, let's see here would be your order block. All right, your last candle that has your last down move. What does it do? Trades into that order block, comes right back up, just like it did the previous one. So previous one came down, hit that last up down move. Same thing here, hits that last up down move, trades into it again, goes above. And then if we get rid of this, there you go, you have a candle right here. It's your last, you got your down move. There's probably an up down move in here, so that's why it trades to that candle and then goes back up. Right, so I'm seeing a lot of bullish movement out of this instead of bearish. I'm not really seeing, I mean, whenever it does turn around, right, it turned around right here, which was this last, right, so you had this big boom down candle, then you have an up move, right, so that's where it traded to there. If you're gonna look at it more of that sense, this here you got this boom, this big kind of this upward burst a little bit right here, so it goes into that area, right? Once it trades into that area, sometimes it kind of nullifies it, right? So you know you've already blocked out that price action, so whenever it comes to that price action again, sometimes it can cut through candles, sometimes it doesn't, right? So you really don't have, and what you look for, especially you look for engulfing candles. So if this was to be bearish, these red candles should be engulfing the green candles. You should see bigger red candles than you do green candles. I'm not seeing that. Instead, what it did is it came down to here, this red candle right here, right? So this came up, right? Stopped, down move, up move, right? So when it came back down to this big down move, up move candle, it moved up, right? And then really no call for action here. It just seems like the price just wanted to move down, right? But once it does hit certain levels, right, you can see it start bouncing its way up. And yeah, okay, if anything is going to happen here, what am I looking at? I'm looking at here, just because you do have this big 5-minute candle, right? I would look for price maybe to come back down to here before it comes back up, if it does start to fall, just because there's a lot of sideways action. And because there is a lot of sideways action, it does look like that could be considered a liquidity pool, and or an area where people are thinking that this is going to be a what's the word I'm looking for? Geez, support zone, So people are thinking, hey, this could be support, buy once it gets here. Instead, it'll go through it, probably hit this area here, which is also probably where the order block is, right? Continue upwards. If it were to sell, you would probably have to wait until it gets back up to here, right? I think it'll get above this. I think this is a draw on liquidity. I think you have a big liquidity pool right through here. And the reason I say that is because if you look here, go sideways, right? So you have two equal highs right here, and then you have a high just below that. So people are thinking that this is resistance levels, right? This is where price likes to draw to and then go above, right? Go barely above, and then they'll go down. They'll take those people out. People have those buy stops they set here, or they have their sell limits, and it'll get into the sell limits, and they'll use this as their as a resistance zone. So they'll put their stop loss here, and instead, so it triggers once it gets here, boom, they're out. It still goes up to here because this is where the actual candle is, right? So if you look over here, get rid of some of these lines here. Jeez, I have fat fingers and I always hit something, right? So instead, what I would be looking at is anywhere in between here and here for it to sell. And even then, I'm not even so sure about that, because look, you have another liquidity level. You have more equal highs. So this tells me there's a lot of bullish movement in this. I see a lot of liquidity levels above this that could keep, and what it could do, it could pull above this, right? Let me scrunch this together, give a little bit of a better idea. Pull above this, hit one of these blocks, pull down below it, and then you're going to see a bullish order block somewhere in here. All right, go above it, pull back down to a bullish order block, continue going on. I see a lot of bullish movement in Litecoin, to be honest. And then here you have equal highs as well. You may not think of this as an equal high, but I do, right? So you have these candles right here that look like they're not going anywhere. You pull that straight across, it's just about equal with this high here too. So this is where the algorithm looks to go. It looks to go to these equal highs, pull just above it, and then go down below it. See, it does it here. See, right here, you see these equal lows. What does it do? Goes down just below those equal lows, pulls back up, right? Here's a little bit of a high. It goes just above that high. And, here's some lows, pulls up, goes just below those lows. So you have to watch the algorithm and see what it does, right? You have to look for these equal high, equal low areas. Understand that's where price action is going to go. So I think maybe it could pull back, hit this, and then continue going up. But again, along the way, using that stair-step process, breaking those highs, pulling back, breaking those highs, pulling back, breaking those highs, pulling back, and then continuing on. And that is what I've got for you, right? For at least for crypto. Again, if you like what I've done so far, please hit the subscribe button, hit the like button. It helps me with YouTube's algorithm. If people do hit that like and that share, just hit the like button at least if you can. It gives me more visibility into other people wanting to watch and learn how to trade, things like that. it just helps me boost, I guess you could say. It helps YouTube boost me to reach more people. More people want to see this, and hopefully I'll be able to reach them using this. I'm almost at my hour, so I know YouTube will probably kick me off soon. So what I'm going to do is I'm going to stop this right here. I'll be back in just a second. I'm going to kind of fix this the video stuff that's happening, and I'll start with my my Forex stuff. Okay. All right. Thanks a lot for watching this part of it, guys, and I will see you guys shortly for part 2.